Starting with gold, which is trading near one-week highs on the back of weak dollar, but trading remains subdued as investors turn attention to the U.S. policy meeting in the next week. On your screens, 0.5% of a gain, 12.46 on the last count. The Brent crude prices also are back above $110 a barrel, recouping some of the sharp losses from the previous session as data from China reaffirms signs of stabilizing growth and fuel demand in the world's second largest oil consumer. China's implied oil demand rose 1.5% for the month of November to 9.94 million barrels per day from October. It is the highest level in last 5 months. On your screens, more than 0.5% gain coming in for Brent, and the NYMEX prices also have seen a strong inch up. Let's get in then. Kishore Narne, he's Associate Director, Head Commodity and Currency at Motilal Oswal. Also joining us is Vijay Bhamwani, who's author and CEO at BSPL India. Kishore, hi, let's start with you first. And what's your sense that you are making for the crude prices rebound, the second straight week where we have seen a huge jump up coming?
I think, Manisha, there have been a lot of inventory related price fall earlier, and I think as refineries come back and the glut has been somewhat addressed in US, I think we can see some continuation of this up move. But again, I'm not seeing a significant up move from here. Maybe another couple of dollars you'll see resistances coming up, and also positive numbers on the employment situation, as well as China posting some better numbers on manufacturing are also helping the sentiments. But I don't think there is any major bull trend remaining in crude, because the supply side still remains very comfortable, and that would keep a lid on prices around $95–96 on WTI.
That's of course a near-term perspective coming in for the commodity. But Vijay, what's your sense before the year ends? How would you want to take a look at your positions?
Manisha, crude might just go up a little to 6040 to 6065 band in the absolute near term. One needs to take a view above the 6065 if the rally kind of persists. The better than expected employment data, the higher exports from Germany, which is posting a very robust export growth, is leading to some kind of speculation that the economy is now not half as bad as it was thought earlier. There are, of course, voices like Jim O'Neill saying that the world is now basically slowly gaining momentum on the economic front. That is aiding the recovery in crude prices, and you're seeing that trickle-down effect also coming in on industrial metals. I think it's a little too premature to call it a trend reversal. However, there would be some bear covering and lead prices somewhat higher. So in the next 1 or 2 trading sessions, you might just see shorts getting squeezed marginally, and therefore the possibility of some more upsides.
Well, some more upside not ruled out in the near term to medium term coming in for the crude prices. It also has to do, of course, with the winter season demand, which does tend to support the prices. But Kishore, the precious metal space then, and while we have seen a rebound in last 24 hours, what's your sense here? And of course, near term, slightly medium term, do you think people could hold on to the longs here?
Manisha, probably I think again here also we can see some extension in uptrend, especially in silver rather than gold. I think gold will continue to go up, but I think silver would this time outperform gold on the higher side. But again, as we head towards the FOMC meet, much depends on the commentary provided by the Fed at that point of time, and right now the market has already discounted possible tapering in early 2014, and I think despite all these things, gold is getting a significant support at 1215, 1220 kind of level. So I think if this level sustains and probably we break through that 1250 kind of levels, probably we can get some kind of momentum to build up to 1280 kind of levels. But I don't think in short term we'll be breaking this 1180, 1185 kind of levels on the lower side. So it's a tight range or slightly bullish bias. So I still remain to be long over short to medium term. But again, the strategy will be revised post FOMC meet.
Fair point. Yes, FOMC would really be a decision maker there. But Vijay, how would you look at the silver prices now? Because we've seen it more or less hold around that 42,000 mark on the lower side. That hasn't broken. Does that give you confidence enough to go long at these levels?
Manisha, I would still avoid the leverage space and remain focused on deliveries rather than try and pay a huge cost of carry on longs that I buy and hold and roll over to the next settlement. Because I would want a trade above 45,600 levels on silver before the leverage guys can come in and start show some confidence. But at lower levels, yeah, I don't really mind picking up some deliveries.
Okay, that brings us to the base metal space then, which also has seen some good gains coming in during the day today. Yesterday was yet another good day, especially for the copper prices, where we seem to be holding above that 7,100 mark as well. Kishore, the data has been strong, whether it's China or US as well. The LME inventories also have been declining. Would you see another case of perhaps some gains from here?
Yeah, I think again short term we can still see copper rallying towards 450 to 455 on domestic markets. Probably even LME could rally a little bit more. But I don't think again similar to the crude, an extended bull trend is not something which is very much evident in copper. Again, you all know that it's a surplus metal this year, and even 2014 is going to be a surplus year. So, but I would like to bet if you are looking at a medium-term perspective within the base metal space, I think nickel is looking much more stronger, and it would emerge as outperformer in the entire space. So. Copper still intraday, it's a good buy. Probably 452 is a target for the day, and 443 half will be a stop loss for intraday purpose.
Vijay, how would you look at the nickel prices? Because that continues to be an underperformer for 2013. At these given current levels, would you want to go along on that? Because we've seen iron ore prices, steel prices see a bit of a gain coming in. Do you see a trickling effect of that here?
I think yes, Manisha, as long as the price stays above the 860 mark. There is a possibility that nickel could go past the 870, 874 levels also. And this view is, of course, for the next one or two trading sessions. I think I would tend to agree with you that it's been a laggard for the last couple of weeks and months. So there is likely to be a possibility of somewhat of a catch-up and a kind of a bear covering base rally, which could take it to the 874, 875 odd levels. So keeping a stop marginally below the 860 mark, I don't really mind taking a punt in very short position, very small size positions on the long side.
The agro space, where the sugar futures have declined yet again today to subdued demand from bulk buyers amid ample supplies, as the country is set to produce a surplus sugar for a fourth straight year. On your screens, more than 0.25% of a decline there. The chana prices in the meanwhile inch down as well due to ongoing sowing operations and prospects of a better crop. You also saw turmeric futures declining on mounting stocks from the old crop, lower than expected spot demand and approaching new season supplies. The only thing that was perhaps holding slightly better was jeera prices, which was firm due to rising demand from overseas buyers and hopes of a pickup in the local buying, though the prospects of higher output capped too much of gains there as well. Vijay, sugar prices first of all, 2720 has seen a breach.
Absolutely, Manisha. The mid and far month futures are now approaching the 2720 levels, which I talked about, as also the feeling that the pre-election year is likely to see an extended move to subdue food prices. Let's not forget the statements in the political quarters that it's the inflation, rising inflation rather, that has seen a dramatic shift in voter preference, and therefore at the ground level, there is a feeling within the commodity traders that there is possibly a higher emphasis on subduing the speculative premium in the food prices. And that is likely to basically see some more downsides across the board, whether it's sugar, whether it is pulses, whether it's edible oils, or even to some extent even spices. So what you are seeing is an extension of that feeling, and the possibility of that 2720 in the mid and far month futures getting breached marginally also exists. But the medium to long term trend still remains higher, and my guess is come near the election time, prices may just see a rebound. So what you need to do is basically time your entry on the long side and defer it slightly below the 2720 mark. There is a possibility of breaching that, so you might just want to wait and bottom fish a little lower.
Fair point. It's not just the sugar prices which may see a rebound. We already have seen that trend coming in for cotton prices, which have seen some stability on reports of export demand and likely lower supplies as farmers hold back, hoping for better supplies. The supplies are restricted at around 1,50,000 as against expectation of 2 lakh bales on a daily basis. The industry says that if the spot cotton prices fall below 38,000 rupees to a candy, the arrivals could actually fall more further on the lower side. Let's get on phone line then. Dhiren Sheth, he's President, Cotton Association of India, and he is in Mumbai. Mr. Sheth, hi, welcome to the show. While we have seen very sharp declines coming in for cotton, this week actually has seen some stability coming back.
That's true, because the arrivals had been low, like you mentioned, but I think since yesterday, arrivals have picked up again, and we are now at almost 2 lakh bales a day. So I think prices should fall down again.
Prices falling below 38,000 because that seems to be a level where the industry is really not comfortable.
No, I think it will happen. It's bound to happen. There is no denying that fact. It's a question of time. And like you said, once that prices fall below that level, they come very dangerously close to support price levels for the government to come in.
Mr. Sheth, also since there are some reports of exports coming in, do you think that is a supportive factor and do you see it continuing? Also, what's your sense from the kind of numbers that the China seems to be releasing in sense of imports?
Well, exports is not really big, certainly not as big as last year. And that's one of the reasons why prices are down. China is not an active buyer.
All right, Mr. Sheth, I appreciate you joining us. So that's the view coming in from the industry really. While the prices have seen stability, going forward, you could be looking at more declines in case of cotton prices. Guar seed then and the futures have seen a decline onto that one for many sessions now on prospects of higher production due to an expanded area under cultivation, though a decline in daily supplies as farmers held back waiting for better prices has limited the downside here as well. Let's go across to Purushottam.